And for more on the yuan and its future, we're now joined by Wei Gu, live from Hong Kong. She's the editor of China Wealth and Luxury and head of original reporting for the Chinese edition of the Wall Street Journal. Thanks for joining us, Ms. Gu.
Good morning, Michelle.
Hi there. All right, hi there. Let's get straight into it. China's move to weaken the yuan, it's caused a lot of controversy. Last week, the People's Bank of China said that they could head off further similar adjustments by this move, and that it's likely to move in both directions as the economy stabilizes. What does that mean exactly?
Well, the central bank said that it's a one-off move, 3%, and they said that the analysts believe the yuan is overvalued by 3%. But the markets apparently don't believe that, and they think that set off a long process of yuan devaluation. So before the central bank came in to assure the market, so the market has been falling to its limit of 2% every day. So if the central bank doesn't step in, it could just keep falling to find its equilibrium level. Currently, offshore, there is this yuan NDF forward product, which shows that the market believes the yuan to fall another 3% in the next year.
Well, you know, Ms. Gu, countries adjust their currencies all the time through cutting or raising interest rates, bond buying programs, or just buying back their own currencies. That is the main function of a country's central bank. Both the ECB and Japan have used really aggressive monetary stimulus over the past few years to lower their exchange rates and to boost their economies. So why has China's devaluation action caused such a major global reaction?
No, that's a really good question because, well, in the global terms, China's devaluation, 3%, is really small compared to all the other currencies like yen and euro, as you mentioned. But in the China terms, because China has kept it on such a tight leash, that's very big in Chinese terms. So here is the political controversy here. IMF currently doesn't believe the yuan is undervalued anymore, but the US think that the yuan is still undervalued because China still runs a current account surplus. So that surplus has been reduced from 10% of the economy in just a couple of years to now it's 2% of the economy. So that's much smaller now. And the US is also saying that China should make it a more market-oriented currency. So that's what China is trying to do. So it kind of give it a bit more freedom and say, now we're giving to the market and see, this is what the market telling us. We have actually been doing the US a favor in managing the currency at an artificially high level, strong level.
Well, you said that the IMF does not consider the yuan to be undervalued, but the IMF was thinking about including the yuan in the reserve basket of currencies. It's decided to postpone a decision on that inclusion by about 9 months or so. What's the significance of this?
Yeah, this I believe is kind of the main reason, one of the main reasons for China to come out and have this big announcement that we are having the yuan daily fixing rate to be more in line with the market because China wanted yuan to be part of the SDR, the global currency basket. So that's China's goal. And from an IMF perspective, they also wanted to broaden the base of the SDR. So they wanted China to be part of it. But the thing is, China doesn't really pass all the tests. So if you look at the flexibility of the yuan, the capital use of the yuan, and how market-based that is, it's actually falling kind of, if you rank, if China needs to be the top 5 on these. So currently, on certain things, it's lagging behind. So that's why China is trying to use reforms to show that it's making progress. So IMF came out and said, well, despite China's recent move, it's still not quite yet up to the market. So it's being generally interpreted by the market as a negative thing that China is not going there. But realistically, people shouldn't have expected China to join the SDR in this review. It's more likely to be in a year or so. So in some way, it's also can be interpreted as a positive thing that the IMF is still willing to work with China to push this forward.
Right, so still progress needs to be made and will be made. The weaker renminbi has impacted perhaps the Fed's decision. Do you think that the Fed will delay raising interest rates here in the U.S. because of the devaluation of the RMB?
Michelle, I don't think the yuan decision will have any impact on Fed, because Fed has to take care of what's best for the U.S. and not necessarily what's best for the world. And in terms of spillover effect from China, well, yes, we have seen with currencies around the world in reacting to China news, and the commodities weaken as well. So in a way, this may have a tiny impact, but I think Fed will proceed whatever it wants to do.
All right, we're going to have to leave it there. Very interesting conversation. Thank you so much, Wei Gu, editor of China Wealth and Luxury and head of original reporting for the Chinese edition of the Wall Street Journal. Thank you for your time.